Hello, I'm Sue Scioli. This is Alan Scioli, and we're with Scioli and Associates. We are a representation firm in Saginaw, Michigan. We represent taxpayers nationwide. A little bit of background about each of us. We each worked for the Internal Revenue Service for over a decade. I was a senior tax specialist with the service on the customer service side of the house. My primary job was working with the practitioners in the community and doing a lot of education and one-on-one opportunities to assist. Alan was a revenue officer, so he was on the compliance side of the house. He was enforcing and collecting the monies, the taxes that weren't getting paid in. He also had a customer service and a tax specialist background before he moved into that position. About a decade ago, Alan and I saw a growing need to represent taxpayers. What we saw was that many taxpayers didn't understand what their rights were, and a lot of practitioners were not familiar with those types of rights because it was not their area of specialty. It was way beyond the actual preparation of a tax return. And so what we began doing was actually trying to assist in the representation of the taxpayers. So now, for the last 10 years, we've had an opportunity to work with the practitioner community, representing their taxpayers and helping them to assist in the success of those cases.
Thank you, Susan. Seeing this growing need, Susan and I both stepped forward and felt and saw that there was also a need to develop the educational aspect of the practitioners community. And so we have developed this webinar series called Tax Representation Done Right. These films that we're going to be doing are going to be in-depth and enough that the practitioners are going to be able to utilize them to help them better represent their clients.
Right.
And going forward. That is the purpose of these videos.
Absolutely. In today's video, we're going to be doing an overview of audit representation. The number of audits that have been happening in the United States has increased on an annual basis for more than 7 years. At the same time, the funding that the government is providing to the Internal Revenue Service, to the compliance side of the house, has also increased for more than 7 years in a row. So what I'm really trying to tell you there is that the number of audits is going to continue to grow. We're going to continue to see more and more audits, and so this is an area that you really need to be able to assist your clients in. No one knows their clients' books and their records and their business better than you as the practitioner.
And you're right, Susan, in those circumstances, you're going to see more and more as we go down the road in the future, where there's going to be more use of computerized generated reports. There's going to be more correspondence type audits. There's going to be more audits that are going to be done via mail or via computer versus face-to-face type audits.
Right. And last year, there was over 600,000 face-to-face audits. That sounds like a significant number until you find out that that was only 30% of the audits that the IRS actually performed last year. So that means that 70% of the audits that were performed were actually done via correspondence. So that's over 1.3 million audits that were done in a correspondence method. So, again, this is an area that our clients need you to be able to represent them in. When we talk about the different types of audits, there can be a field audit, which means that you're actually going to be sitting across the table from an IRS employee. Now, it can be an actual field audit with a revenue agent, which means that they're going to want to come out to your place of business or to your client's place of business. There can also be what's called a field audit, but it's actually done in-house, and they are done with tax compliance officers, or TCOs. Now, they aren't actually out in the field, which means that they're going to ask you to come to their office. So you are going to be coming into their office to perform that audit. Both of those are considered to be those field audits. The other option that the government has to be able to review a tax return is the correspondence audit. It can happen with the government sending out a letter to the taxpayer asking them to verify specific items on the return, which is the typical correspondence audit, but the government also utilizes the CP 2000 as an opportunity to be able to review and correct a tax return. Most practitioners, you're familiar with CP 2000s. Those are the letters that come out after a return has been filed and the government is saying, we think you've missed something that should have been reported as income income on the tax return. So those are the different types of audits that are out there. Further seminars that we're going to be putting on, for further lessons on these webinars, we'll go into more detail on each one of those different types.
And we'll be focusing a lot on the practical aspect from the practitioner point of view of how to actually go forward and represent, and some of the little tiny, I call them secrets, but some of the better practices that can be actually implemented by you as the practitioner out there in order to go forward and represent zealously and for your clients.
Absolutely, because for us to be able to effectively and zealously represent a client, we have to know what the law says, we have to know what our rights are, and we have to know what our clients' rights are. So those are things that we are going to try to instill through these webinars. It's not the government's job to be able to tell you what your client is or isn't allowed to do. It's their job to make sure that their mission statement is being reached, which is to ensure that the correct amount of tax is being assessed and collected. So it is our job to actually make sure that we are prepared and knowledgeable to be ready to represent a taxpayer efficiently and effectively. When we're talking about an audit, the government looks at two things. Obviously, they're looking at the expenses that are being placed on that tax return to make sure our client can document the expenses, that they were legitimate and correct to be taken on the tax return. But they also look at the income on that tax return to ensure that it is the correct amount of income. So there's two things that they're going to be focused on. When we start to talk about the income and the expenses of an audit, there are two different approaches that the government looks at when they're going to decide whether or not they're accurate or inaccurate. On the income side, they want to take a look at the person's lifestyle and their bank accounts. Do the bank accounts and the deposits that are hitting those accounts match the income that was reported on the tax return? And what about their lifestyle? How does that compare to the amount of income showing up on that return?
In the follow-up series of videos that we're going to be providing, these videos will go more in depth on very specific subjects of the audit process. And these audit processes are designed to help you as the practitioner more effectively represent your clients.
Absolutely. Absolutely. We look forward to seeing you in those future videos. Thank you very much.
Take care.
Hello, thanks for joining us. I am Sue Scioli, this is Alan Scioli, and we're with Scioli and Associates. We are here today to cover a topic of audit representation through our series of tax representation done right. Audit representation is an area that is so critical when we are talking about being able to really take care of our clients and service our clients. Part of our job as a tax preparer is not only to prepare an accurate tax return for our client, but it's also to make sure that we are teaching them and educating them along the way so that if an audit does ever come up, they've got proper records, they've got good record keeping habits in place, and they're ready and you're armed to be able to represent a client in an audit circumstance.
That's right, Susan. I agree with that whole circumstance and that statement. A lot of times why we came to do this, Sue and I both worked for the service for many, many years, and we saw that there was a great need for not only the tax law and understanding the tax law from practitioners, but actually how to practice and how to properly practice. And that is why we're calling this Tax Representation Done Right. This series is going to teach you how to actually do better at the practicing, and we hope that this video is both useful, timely, and also informative for you guys out there.
And representation doesn't begin when the client makes contact with you and says that they've actually gotten a notification that their return is under audit. It really does begin prior to that point in time. It begins when the client is in that office with you and you are going over their records and you're putting that return together. But when that client makes contact and says that they've been notified of an audit, it is our job as a tax preparer, as a representative, to step in quickly to protect that client from the very beginning. We have found through all of our years of experience that the IRS will make contact through a letter. They'll notify our clients that they are going to audit a tax return. And one of the things that that letter will do is ask the client to make contact with that agent within a certain period of time to schedule a meeting or to confirm a meeting time and place. That initial contact is the beginning for that revenue agent to begin to talk to that client and to form an opinion. So it is so critical for our clients to understand that that is the point in time where they need to make contact with the preparer, with you, and for you to be stepping in and actually handling that initial contact and begin representing from that point in time.
That's an actually very good point, Susan, because a lot of what we're going to do for you as the practitioner out there is we're going to explain to you what practice aspects you can and can't do, and also we're going to give you guys some references out there specifically to the Internal Revenue Code. How many times, Susan, do we talk to practitioners and they say, well, I'm not sure if I can do this. I'm not sure. This agent said if I don't do this, he's going to disallow these expenses. So we're going to go into that today for you. And again, we hope this series is very informative to you, and we're going to try to bring to you what we hear when we travel the country and we talk to practitioners around the country on these specific issues.
Right. And when we start to represent a client, there's a couple of things we want to make sure that you understand right from the very beginning. There are 3 different levels of licensing that will allow a tax preparer to represent a taxpayer before the Internal Revenue Service. It is an enrolled agent, which is a federal licensing. There is a CPA, which is a state level licensing, and then there is an attorney. Each of those individuals is able to represent before the Internal Revenue Service. But as a tax preparer, even if you are not licensed or you hold an RTRP licensing designation, you are still able to represent in an audit as long as you are the preparer that actually prepared that tax return and signed it as a paid preparer. So when we begin to handle an audit for our client, the very first thing that we need to do is get a power of attorney on file with the Internal Revenue Service. It's a Form 2848. It's a power of attorney form that allows us to literally step into the shoes of the taxpayer. So they are no longer going to be the contact point that agent is going to be working with. They will be working directly with you as their representative.
And that's another good point, Susan, and that is, if we don't have that 2848 on file, what is our main tool in this audit? Our main tool is asking questions, not being afraid to ask the questions, not being afraid to question the IRS agent who's actually assigned to the case, and without that very critical document, the 2848, you cannot do that. So Susan, one of the things we talk about specifically along the way here is what is zealously representing a client? Well, we're going to go into that more in detail down the road here, but having that document, the 2848, asking the questions, not being afraid to question what is being said to you by the agent is another important component we're going to show you down the road.
Right. Thank you. And with the power of attorney form, when you are preparing that, the client's going to sign it. Because the audit has already been selected, the return has already been selected for audit, you are going to have to follow the normal channels of sending that power of attorney form into the centralized authorization unit, but you also need to be sending it into the revenue agent directly that has been assigned to this case. They've already done their research. They've already seen that the power of attorney wasn't on file when they began the audit, so they don't know that you're going to be stepping into those shoes of the representative until you make contact with them. And they will need that power of attorney to be able to talk to you. They can't even return a phone call back to you if you leave a message if they don't have that power of attorney in their hands to know that you're the person. They're allowed to acknowledge that audit is in existence too.
And just like you said earlier, Susan, when you have a circumstance where you're the practitioner and your power of attorney is not on file, starting that audit off right or wrong can end up being very bad, because if that power of attorney is not filed and that agent contacts that client and does that initial interview over the phone, several things can be stated that can be very detrimental to the client.
Right.
For instance, in a couple cases we've had in many years ago where
We had a circumstance where the taxpayer made contact with the revenue agent thinking they were doing the right thing just to confirm the appointment before they made contact with their CPA. And the taxpayer told the revenue agent, it's going to take me a couple of weeks to get my records together because they're a mess. Well, the revenue agent's job is to interview that taxpayer. Their job is to investigate. That's what they are trained to do. So the interpretation of that statement was that the records are a mess and that this taxpayer probably is not going to be able to document and support a lot of the expenses taken on that tax return.
And really, in that circumstance, what it was the client just simply had moved from one location to the other. He had good records. It is just a matter of the boxes being moved from one location to the other. So there's a miscommunication and things can be taken out of context. So that's why it's so critical that we step into the shoes of the taxpayer by using that 2848 and getting in there, okay? I just want to say real quick, the code section itself, which a lot of tax practitioners don't understand, is code section 7521. 7521 specifically states that the IRS may not compel a taxpayer to appear or provide documents on their own behalf when there is a valid power of attorney on file. And where this becomes important can be in the production of documents. If you as the practitioner have that power of attorney properly on file, and you have properly notified that agent that has issued that audit request that you are representing that client, then that agent cannot contact that taxpayer or practitioner and tell them to appear, provide those documents without the representative there. And we're going to tell you why that's important. We're going to tell you why that's a critical aspect, and we're going to give you some examples that we've run across in the past. Susan?
Remember that when you are representing a taxpayer in an audit, your job is to zealously represent them. The IRS's mission statement says that they are to ensure that every taxpayer pays the fair amount of tax. And that's our job as well. As tax professionals, our job is to make sure our client only pays the fair amount of tax. And that means in an audit that we are going to have to zealously represent our clients so that each and every expense and document that they have that is complete and accurate is going to be taken into consideration during that audit and going to be allowed. So when we talk about section 7521, it really comes into play to say that you're the one that is going to be the contact point, the person that the government is going to be working with. Because like we said in our example before, too many times a taxpayer can make a statement that on the face is an accurate statement but can be misinterpreted or could be misleading, and we don't want that to happen in that audit. So our job is to step in, stand between the taxpayer and the IRS. We're standing in that gap, and we are going to protect that client so that the representation is going to be accurate, it's going to be quick, it's going to be cost effective, and at the end of the day, that taxpayer will only pay the fair amount of tax to the government.
Once the POA is actually on file with the IRS and is on file with the revenue agent, the Taxpayer Bill of Rights actually prohibits the IRS from actually interviewing your taxpayer. So that is a very critical point. And what you need to know is that the IRS must consult specifically with the power of attorney. They cannot just bypass that power of attorney. Now, there are circumstances where if you as the practitioner are delaying and delaying and delaying and creating what they call unreasonable delays, then the IRS has to first issue you, the practitioner, what is called a bypass letter. And basically what that bypass letter is an opportunity for the IRS to express why they think you as the practitioner are unreasonably delaying. And again, we got to make sure that we don't get confused with zealously representing versus unreasonably delaying. If you as a practitioner get a bypass letter, it is highly critical for you to very, very clearly and in writing, and this doesn't mean making a phone call, this doesn't mean talking to the manager, you can do those things, but your responses should be in writing back to the agent or back to the manager, whomever issued this bypass letter, to tell them why you feel that that is improper for them to attempt to bypass you as a power of attorney and to get to your client directly. So, critical for you practitioners out there, understand it is important to zealously represent your client. It is important to control the scopes of your audit. An agent may take that control that you're exerting as a power of attorney as either an unreasonable delay or interfering. And you have to make sure as a power of attorney that you are not doing those things. You have a right to control your audit. You have a right to control the data. You have a right to question why they're requesting that and to have further discussion on that specific issue at that moment in time in the audit with that manager to say, no, I don't believe that's part of the audit scope. So that's important for you guys to understand what that means and not to be intimidated when an agent says to you, well, I'm going to issue a bypass letter, I'm just going to go talk to your client directly because you're asking me too many questions. That is never appropriate, and that should never be a circumstance where you are fearful as a practitioner to try to enforce the zealousness of your representation. Susan?
When we talk about the zealous representation and the power of attorney, it's also important to understand that the client has to understand what your role is here. You need to make sure your client knows that they are allowing you to represent them, and that means that they are not going to be the contact with the IRS anymore. It also means that they are not going to make contact with the revenue agents. Alan was talking earlier about a bypass letter. Understand that when that bypass letter goes out to you, your client will also get a copy of it. And you need to know that because you need to make contact with your client first to let them know that that letter is not accurate and that you will be responding back to the service. Because what we've seen in the past is that sometimes CPAs and accountants will tell us, my client got that letter and they contacted the revenue agent to find out what was going on. You need to make sure that they understand that they should never make contact with the IRS agent directly. Any questions they have should be coming through you, because the way the law is written, it says that the agent may not contact your client. But if your client contacts the IRS, they absolutely have a right to talk with them and ask questions and take in additional information.
Susan, you're absolutely correct. It is always advisable to tell your clients that you don't speak to the IRS, irregardless how aggressive or persistent that IRS agent is. It is also important that you never, ever, as a practitioner, allow your client to merely be the go-between between you and the IRS, meaning you're providing the data, you give it to the client, and the client shows up or talks to the agent or provides the information to the agent. Your job to zealously represent is to step into the gap between the client and the IRS to provide that agent with very clear, distinctive information that is relevant to the audit and to control the scope of that audit going forward. It is never a circumstance to just merely allow the client to provide the data and be the go-between. And Susan, I'm going to give one example, quick example in this circumstance. We've had a taxpayer in circumstances where the IRS agent assigned to this audit has specifically told that client, even with the power of attorney on file, you will show up. And if you don't show up for the interview, or the initial interview, or during the interviewing, then we are going to disallow those expenses. There is the instance where 7521 comes into play, where you as the practitioner can exercise that proper and legal authority to say no. The code says you cannot compel my client to come forward. The purpose of you being there as the practitioner is to properly ascertain the taxpayer's records, determine what is correct, determine what you're going to present to the IRS agent, and to do it in an organized fashion. By allowing the taxpayer to do it or being forced into it under a duress circumstance by an IRS agent who may not or may know the circumstance. Again, they're investigators. They're designed to elicit open-ended questions and get as much data as they can. But if you as a practitioner recognize the law, which is the 7521, then you can definitely turn around and tell your client, no, it is my responsibility as the power of attorney to come forward, organize that data, and provide it. You cannot, Mr. IRS agent, disallow my client's expenses merely because I am not going to present my client. Now, this is absent an enforceable administrative summons, meaning we are not talking about that at this point in time.
If the government were to summons our client, an administrative summons, then our client would be required to appear under that summons to produce whatever documents were being requested of them. So there's the exception that Alan was talking about.
Correct.
And that is something that is very rare to have happen. And if you have an agent that begins to press that the client needs to be present, a lot of times the question I'll ask them is, have you summoned my client to appear under an administrative summons?